Hello, I'm Regina McCann-Hess, president of Forge Wealth Management, and welcome to our Women in Wealth series. Today, I have a new friend with me. And Sue, can you tell us who you are, what you do, and what you love about what you do?
Sure. Thank you so much for having me on, Regina. What you do is amazing, and I can't wait to chat with you a little bit about what I do. So, I'm Sue Meitner. I'm the president of Centennial Lending Group. We are a residential mortgage banker. We help people with buying their homes, restructuring and refinancing their debt. And that what I love about what I do is that I really get to change people's lives, either by buying their first house or buying their beach house, or really talking with them about what their strategy is and what they want in their life. But I get to provide people with the American dream of homeownership. And I think that that really is amazing that I get to do that every day.
That is awesome. I love that response. Fantastic.
Yeah.
Now we were just talking before we hit record about interest rates and, mortgages and, just for our listeners, because I think a lot of people do feel like, oh, the interest rates got lowered. How does that impact potential mortgage rates? Can you maybe shed some light on that, how that really works?
Sure. So, interest rates are based off of what the market's doing, what the stock market doing, what the bond market's doing, what prime is doing. So it takes a lot of different factors, and it gives banks a interest rate. When prime is lowered, obviously that helps, but most of the time we know when prime is going to be lowered, and it's already somewhat baked into the interest rates because our interest rates look ahead. And we need to have the coupons because we sell all Fannie, Freddie, everyone sells their mortgages on the secondary market. And the mortgages really get wrapped up into the and go to the really, if you want to get involved in the weeds of it, it gets sold as paper in the stock market. So you have to have the coupons of what people are willing to have for interest rates. So I don't actually work with people per se with interest rates. We really work on what their payment is. And we really need to show them that the difference in interest rate between 6.125 and 6.5 is not really that much. Taxes go into what your payment is. Your homeowner's insurance goes into what your payment is. People always like to get stuck on that interest rate when really if we're all very competitive right now. You have the internet that tells you what the interest rates are. We're working in the low sixes right now. And comparatively to what we were working with a year ago in the sevens and almost eights, it really does open up a lot. It allows people to afford more homes and homes be more affordable by about $350 a month, which is amazing. And it really is a great time to buy because the asset of owning your own home allows you to accumulate more wealth because your home is what accumulates the most wealth in the market or in society today. We're seeing exponential growth in the asset of your home. Houses are appreciating over 6% year over year, and there is not going to be a bubble. So it's a great time to buy. And most of the United States is seeing, constant appreciation. There might be some pockets here and there that are being steady or might even be a little bit of a depreciation, but that's not the norm.
Yeah, yeah. And you work with people to figure out what that strategy is for them and how that fits into their budget. And oh, you said it much more eloquently than I did when
So
you're working
we
with
work
people.
with people with regards to a strategy and looking at their entire picture of debt. So if they're selling, let's say they're downsizing and they're moving from their, $1 million house to a $600,000 house, and they want to have a smaller mortgage, but maybe paying off all their debt is better than, and getting a little bit larger of a mortgage that has a tax deduction is better for them. We have to look at the entire picture to really see what fits your situation and your qualification. And then we work, and maybe it's not one and done. Maybe it will take a couple times, and there's a step one and a step two to really get you where you need to be. And that's what we work on. Lots of people right now are like, how do I move from house A to house B when all of my equities in house A? Well, there's many different ways of doing that. You can do a cash out refinance and pull the cash out and put it somewhere until you find that house so you can put money down. But you really need to have a great team of, a wealth manager, a mortgage person, and a realtor to really help focus and look on what the big picture is so that you really get everything you want and you have a path for the future.
No, for sure, for sure. And you also specialize in helping people going through a divorce, and the rules for getting a mortgage or a loan are a little bit different for those people. Do you want to talk on that for a minute?
Yes. So, lots of times, this is why it's so important to have everyone working together, a wealth manager, an attorney, all together, because you need to show if you're getting child support and alimony and you want to use that to qualify, you need to show that you've received it for 1 or 2 months and that you will be receiving it for over 36 months. So we get together with you so that we know how to handle things and what you need, what your big situation looks like. It also is the largest asset you have. Like sometimes one of the spouses wants to keep the house. How do we do that? How do we, get the money out of the house to go to the spouse who isn't going to be at the house any longer? How do we make that all work as smoothly as possible in a contentious situation? And, how do we make sure that, the spouse who might want to stay at the house with the kids gets to stay at the house with the kids. So we make sure that the marital agreement is structured and has the correct verbiage to make sure that we can utilize that with underwriting to meet Fannie Freddie guidelines.
Yeah, and you're saying it like it's just like an everyday thing. This is what we do, but I will tell people that it is a very specialty area to make sure, like Sue's making this sound like it's easy, but she's done the homework, the education, and the experience to know that there are a lot of pitfalls when you're refinancing or getting a new mortgage going through a divorce. And if it's not done properly, you may not be able to get that mortgage for a certain period of time or qualify until a certain time period has passed and you've checked all those
Yeah,
boxes.
so I'll give you an example. I have one person who was receiving $460,000 lump sum and she wanted to stay in the marital house. Well, she couldn't qualify with that lump sum because she had no income. So
Right.
before she got that lump sum, we went back and we asked if that lump sum could be spread over 40 months. The reason
Hmm.
that we said that we wanted it spread over 40 months was because then we could show a history of 2 months of receiving it, and we could show that it would can be continued for 36 months. Was it painful to go back and say, like, she thought she should get the lump sum of $460,000, but I couldn't qualify her with any income because she didn't bring anything in. But by changing that, we were able to structure it so that she could stay in the marital property, the family home with the kids, and she qualified based on the child support she was receiving and the lump sum that she was getting. And that just made everything be really super smooth. But if you're not dealing with a mortgage professional who, is the top 1% in the United States, has a certified mortgage banking license, knows the divorce, all the ins and outs of the divorce situation, you really are leaving it up to chance because there's about 1,000 things that can go wrong. And really being upfront with your mortgage person so that they can say, okay, can I contact the attorney? Can we talk about the verbiage that's in there? Can I see what you guys are dealing with? I mean, if they would have signed it all and I couldn't have gone back and changed it, she wouldn't have been able to stay in the marital home and she would have been so sad and the kids would have been sad. So we made everybody happy.
Yeah, yeah. And that is the difference of working with a professional,
For sure.
as opposed to just doing it,
I always say not
luck.
all mortgage lenders are created equal, and I'm sure that not all wealth management people are created equal. There's a care and a trust element in that. But the one thing that just is soul crushing to me, and I get it more often than not, are the people who decide not to use me, have a bad experience, and then they send me a text saying, Sue, everything you said happened, and we really wish we would have used you. Well, that's so soul crushing for me. Yeah, I'm happy that they realized, not all mortgage people are created equal, but it makes me sad that they didn't have a great experience. And yes, it's not all peaches and cream because you're getting a mortgage. You have to give us 1 month's pay stubs, W-2s for 2 years, 3 months bank statements, your driver's license, like practically your firstborn. And believe you me, I don't want your firstborn. I have 2 children of my own. So, but it definitely seems like we're doing that. And but if you get everything to us up front and we do all of our work ahead of time, it makes it so much smoother.
Yeah. 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 You're either gonna, spend the money now or spend the money later or have the pain later.
Right.
Yes, it is a pain in the neck to get all that documentation ready. I mean, I felt like I was having to give my firstborn the last time I had to go through a refinance or whatever, but there's a reason behind it. So, yeah, I think we can't hammer that home enough that working with the right professional will help you get to the right place with hopefully the least amount of pain
For sure.
involved.
For sure.
So tell us, like, if people want to learn more about you and your business and your practice, where would they go to find out more about you?
So you can just Google me, Sue
Mhm.
Meitner, Suemeitner. Sue, and I'm at SueMeitner.com, and I'm super easy to get in touch with. When the kids in high school have that exercise, like Google your parent, they're always like, "Mom, you're everywhere." So I've been doing this for a really long time, and I think you can find me on any social media platform. I'm on LinkedIn, Facebook, Instagram, and we give great nuggets. I'm really big on social media because I think it's important for people to know, like, and trust you and understand the process of mortgage.
Yeah.
You don't get a mortgage every day.
No.
And, people do have to get acclimated to it and understand. And I love being a resource for everyone to help them in buying, in working on selling to get to the next place, and divorces or restructuring debt. I mean, right now
Mhm.
we have over $1 trillion in credit card debt. Yet, at the same time,
Mm.
more than 50% of people who own houses have more than 50% equity in their house. So they think that having this 3% sexy interest rate is sexy. But guess what? It's not sexy when the average homeowner has over $100,000 in credit card debt at 25%. Like,
Yeah.
that is not doing you any favors. That's $2,500 a month easy that you're paying in credit card debt, more than you're paying on your mortgage.
Yep.
Why not restructure your debt, get some relief, put some money in the bank? So, what I always tell people is you want the three S's: you want safety, you want security, and you want stability. And the way that we can help you do that is by the asset, your number one asset of your home. Today, this week, I have people closing. They just had a 2-week-old baby. They have no savings in the bank. They're pulling out $20,000 out of their house to put it in their bank accounts. They're lowering their mortgage payment. They're also paying off $60,000 in debt. They had an FHA mortgage. They are transitioning to a conventional mortgage, dropping the mortgage insurance premium at the same time. And they just had no idea that all of these options were available. Thank goodness somebody gave them my name and told them to call me, and we got them all situated. And they're going to be in a much better situation and saving over $1,500 a month, so
Wow.
that's going to change their life. With $20,000 in the bank for a rainy day, that's giving them security, stability, and savings.
Yeah. No, that's a great way to look at it for sure.
For sure.
Um, yeah. Good, good, great, great story. I love it. Love it.
I have lots of stories.
Um,
I think people
I
learn the most
bet.
through the
I
stories that
bet.
they have.
Right? Oh, yeah, I can match some of them.
Yeah.
Well, what about like throughout your career? What has been some of the most, challenges that you've experienced working as a female professional?
Yeah, so I wrote a book called Crazy Lucky Girl, Do You Have the Keys to Success 10 years ago. And it really does map out that you really have to be lucky. And I've, as a woman, have been super lucky in my career. I was one of five mortgage, first time, five of, yeah, I can't get that out of my mouth because it's so crazy. When I opened up my mortgage company, which was a mortgage banker, not a broker, a Centennial Lending Group in 2010, I was one of five mortgage women in the United States to own their own mortgage company. Now,
Wow.
think about that. In
Yeah.
2010, I was one of five women that
Wow.
owned mortgage companies. And that just was crazy to me. And so let's talk about some trials and tribulations of being in a man world, which am in now, even of being a banker in the mortgage industry. It isn't easy. It's not for the
Mm.
lighthearted in any way, shape, or form. It, you have to have grit, and you have to really be able to, take it on the chin. And sometimes it's hard to take it on the chin. And it's taken me a long time to take that wall down and to really understand who Sue is. And that was a lot of growth. It wasn't until was over 50 that I had to like really dig deep and look at that, because I had built up such a wall by being in a man world that it was hard to, I had to take that down brick by brick. But
Mm.
it is hard when you go to conferences and you look up at the stage and there's no women on that stage, and you don't feel that you're represented. I've really tried hard to be part of the Mortgage Bankers Association and different collaborations and different organizations to really illustrate and have a voice. When I sold my company in 2018, I really felt that I was letting women down by merging and selling a company, because I was, one of the few who had persevered. It
Hmm.
just wasn't it was the right time for me to be a mom and really focus on my family. I think it's very difficult to be the CEO of a big company while at the same time being there for your family and being a mom. It's very, very, very hard. There's never any balance. You struggle to find the balance, but you have to just be okay with that there's no balance. And you have to be okay with who you are. And it's saying it's okay if I show my feeling. I feel that I'm a great salesperson because I empathize with people. I know what it's like to have a child with a disability. I know what it's like to move. I know what it's like to be divorced. I know what it's like to feel like nobody's on your side. And I really think that as soon as I really understand the borrowers that I'm talking to and the clients I'm talking to, I can really sympathize but empathize with what they're going through. And I think that they see me as, hope that you can get onto that other side and it be okay at the same time. And we deal with people with lots of struggles, when they're getting a mortgage, and that is okay. Um, God only gives you what you can handle most of the time. And, that's what I tell people all the time. But it's hard to be a woman in a man's world. I remember being at the Capital One building, listening to the CEO of Capital One years ago. And I looked around and I was one of like two women in the entire audience, to the point where the Richard Fairbank, who was the president, or he might even still be CEO of Capital One, said, "I noticed you in the crowd, but how couldn't you? Because I was one of only two women." When I went to the Entrepreneurs Organization Nerve in 2011, I remember I was like one of maybe 100 out of 5,000. Like,
Mm.
that's just crazy. Entrepreneurs have made definitely a mark. But where we are in 2024, we really should be further. And, I don't want it to be like, I am woman, hear me roar. I just think
No.
that
No. Preach,
we're not,
man. Preach.
yeah, we're not equal in any way, shape, or form. I was on a panel years ago, and they asked me if I felt like I was treated equally, and I don't. I'm at the top of my game in the mortgage industry, and we're not treated equally.
Yeah, that stinks. And hopefully we can make it better for the younger ladies coming up. But you're right. Yeah, there's a lot of work to do, and we should be further than we are.
Yeah. So
Yeah.
yes,
Yeah.
absolutely. And but we've come a long way.
Yeah,
So, and I believe having grit and having empathy and knowing that, being vulnerable in the workplace is okay. I always say if I could package up vulnerability, it would sell like cakes. I think it's really important to understand that the work culture needs those items in it and really, fight for those things and and women have to fight for what they need to have in their heart, and they need to fight for what's right for them. And,
absolutely.
and I think that we can, and we do.
Yeah. Oh, we
It
do.
just sometimes needs to be on a grander scale.
Mm, absolutely. Yes. I love it. Love it. Well, let's go to the last question, and that is tell us what your vision of retirement looks like.
Yeah. So, my vision of retirement definitely, I don't want my lifestyle to change. I want to be comfortable. I don't know where that's going to be because I have a child in college and I have a child in right out of college. And who knows where they're going to end up and where their families are going to be. So I think lots of people are in their 50s, we're the baby boomers children, are all in that what if right now. We know that it's been really important for us to put into our retirement funds and to save our 401ks. And we only can hope that our 401ks are enough money, which they're never enough. I always said that putting money in the 529 for my children would be enough, and it's never enough. So, so I think that, especially with inflation, and the good thing and the bad thing is that most of our money is in our homes.
Yeah.
And, everybody wants to pay off their house, but I always say, don't pay off your house, put it in the market. Talk to a wealth manager of what you should do. Paying off your house is not the smartest thing to do, especially if you have a low interest rate. Make
Yeah.
sure that, you're putting money in a lot of other places for your future so that you can retire comfortably. And I just try at 50 plus years old to really love on the year. Where is the year? Have I put enough money away that I believe that I mean, at the time, having two kids in college has definitely hurt a little
It's a
bit.
bloodbath. I have two in college, one going next year. It's like I'm bleeding money. Even though I have
Yes,
the 529s, you're right. The 529s are great, but there's all the other additional things.
yes, it's never enough. And I think that you just need to live in the year in the fifth in the decade of 50ism, I'll say. I'm just going to live in the year, and I
I
know I'm
like
not
that.
saving enough, but if I can save more every year, then that will make me be happy. And we need our economy to be back.
Yeah.
We need inflation not to be at record levels. We need
Yeah.
interest rates to be a little low. Like we do need a lot. We need some luck. And hopefully we'll all get some relief and some luck, in 2026. I mean
Awesome.
2025, not
Yeah.
2026.
You're skipping
2025.
a whole year.
Yeah,
That's great.
for sure.
Oh goodness. Yeah, no, I feel you. I feel you, believe me, with the expenses that we put out for these for the colleges and the kids and stuff like that. But yeah, as you go, you got to save too. So great way to look at it. And like you, don't know where the kids are going to wind up. But it's the I love what you say, live in the year. I think I might have to start thinking that way. I think that's pretty cool. Good for you.
Yeah. So,
Well,
but
Sue,
it's taken a while for me to work towards that and living in the year, but I'm trying.
yeah. Hey, it's about progress, not perfection.
Correct. Progress,
Yeah.
not perfection.
Absolutely. Well, Sue, thank you so much for joining me. This has been a pleasure, absolutely, to have you
Yeah,
here.
well, thank you so much for having me. I enjoy everything that you do, and I really look forward to hopefully working with you in the future.
Absolutely. Yeah. And thank everyone else for joining our conversation today. Again, I'm Regina McCann Hess, president of Forge Wealth Management. My website is forgewealth.com. You can follow me on Facebook, Instagram, and YouTube at Forge Wealth, and LinkedIn, Regina McCann Hess. And I would say that the call of action would be to assess your debt situation and assess your equity in your home. And is your debt being utilized in the best way it could be? So with that,
Absolutely.
yeah, we're just going to sign off. Thank you so much.
Thanks for having me. Have a great day.